This is Top Forest again. Today, we're going to have something different, something deeper. If you understand everything I've been putting up in this my platform, every piece of work I've been putting up here, trust me, it's just like a P6. Every part is a P6. So, like I said, it's your job to watch everything from value pullback, liquidity, market structure, liquidity algorithm, directional bias, put them together in a pile of one bomb so you can be using it against markets. So today, maybe some of you have been watching and find difficult to, to combine it together, and it's making it difficult. That is why I'm here today. So today it will be in a video that like, wow, I was never ever watched this kind of, see this kind ever like this before. So this is what this video is going to give you. So it's going to give you, we're going to talk from the how, like it's going to feel like a weekly recap. It's weekly recap, fine, but how you should handle your every weekly trading activities, for you to become the top version of yourself, the best version of yourself in your trading career. Yes, this business is a competition job. We are trying to take money from each other. That is simple definition. There's nothing much. We are trying to take money from each other. Why the bigger people have more chances to take our own money? We're just using a very good strategy and risk management to taking little from them. So despite this competition market, but it is not competition against you and I, or generally it's not, because the reason is this: I'm not the reason why you are not making money, and you are not the reason why I'm losing money. You are not the reason why I'm not making money. So that is why this business is just like a you versus you. You understand? So how can we handle a market where market want to open in every weekly basis? So example now first. I have my equity, I have my account. So I'm taking 1%. First of all, I'm going to pick a pair, maybe one or two, based on what you have learned, what you have done. But if you say you are skipping like 5 pairs, 6 pairs, 3 pairs, 4 pairs, trust me, I don't know how it's working for you, but let's see how this works out. So I pick a pair, I pick gold. I pick gold. Okay, fine. That's pair. Then I pick session. When talking of gold, yes, Asia move, London move, but no matter how move the London or Asia have, it's just a joke to New York session. The New York session can move the double of their movement or 1.5 of it, so which is quite good enough for me. So I'm going to take a New York session. New York session. That's number 2. So now back to that is my decide of pair and the session I want to trade. Now I'm taking 1% of my account every day. I'm ready to lose 1% of my account, no matter outside the account or how small or how big it is. I'm willing to risk 1% of my account per trade any day. So, but in this kind of system, I'm not using 1% per trade. I'm using 1% per day, my trading section. So I'm going to risk 0.5 per trade. I'm going to tell you why I'm risking 0.5 per trade. Reason is because sometimes I might trade liquidity. I might enter market in the liquidity zone. A market will sweep me out. And after all, I perceive, oh, market is still have potential of going where I want to go to for. So that's why I'm risking 0.5%. And I have to have reserve 0.5%. So I will have chance to revenge. We call it revenge. So okay, market take me out and I still have chance to, or maybe I got the bias wrong and I see, oh, this is where I'm supposed to look market, or maybe I'm already in market and market is going to my direction and I still have chance to, market have to pull back little. Market is not just a parachute. So market can pull back little. So when market pull back, I can still have chance to be another entry. That is why I'm reserving 0.5. It's for revenge or for adding more trade. That's just it. So, and if I blow the 1%, I'm off that day. And if I enter, use 2%, I'm making more profit that day. So that's the plan. Now, when we have this in table, it will now up to my strategy. You understand me? So strategy, we want to take it from everything you have been watching on my YouTube channel, from value pullback, liquidity, market structure, advanced market structure, liquidity algorithm, advanced liquidity algorithm, directional bias. So first of all, bias. Bias means it's how this market is strong on higher time frame, weekly, daily. Where market, you cannot use the weekly market structure. So when we get to weekly, when we find a bias, we see that. So we're going to get our bias from higher time frame. Simple as that. Bias is from higher time frame before we go to lower time frame. So to apply our strategy. So our strategy I want to use now, I suggest the only one I've been putting up here, two, is just market structure, which is called SMC, market structure, which is called SMC, and liquidity algorithm. So we need to recap it before we jump into the chart. So sorry for that. What's going on? I don't know how to make this draw very well. So as we see, market was bearish right here. So let's say we are looking for buy opportunity that day. Definitely, if you want to use liquidity algorithm, your buyer say buy, and you go to lower time frame, and you want to use liquidity algorithm. So definitely, you want to see market in a bearish momentum. So when market was that bearish, market is creating all this liquidity area. You understand? So as they're coming down, they are coming down to take every liquid that was created before. That is not a focus on it because it's all this that is creating. So when market have this kind of market structure shift, then you cannot be in a market to what? When market change character here. So this is kind of liquidity algorithm. That is how it works. As long as you have your bias and you have your session and you see this kind of stuff, there's nothing for you to be panicked because you already planned. So target all this I, maybe 1 ratio, because market will be going like this, taking them again by creating another liquidity below. So, but your job is market to seek all this liquidity. That is liquidity algorithm. So that is one strategy. The second one is market structure. So let us say you want to look for buy as well. We have let's say break of structure there. Market was quite bearish before. Market take this low and market change character above here. So I want to mark structure. What I'm marking here is this. Anytime you already have your bias and you go to lower time frame, all you have to do is what? Mark the structure that already formed. It's when you mark the structure that already formed, it will now, you know, so in this scenario, we have change of character here, then without any, so to me, we have another break of structure here. So if I want to mark, I will say this is the last high that broke structure. So my bias is what? It will look for buy that day. Right. So, and now when I drop to lower time frame and I mark the market structure that happens here, why do I mark this out? Yes, this is it. Where the market start from? You change character here, make another pullback or pullback, or the market came back, claim this liquidity like inducement, market make another break of structure. If market doesn't take any place right here, I won't consider any here as break of structure. If market doesn't take liquidity, there's no break of structure. Just that's a simple fact for you. It's just like market is going in one direction and market come back, pull back, take some pullback, like liquidity, then it's continuing. So it tells you that despite market came back to take some liquidity, it still break the ISI before. Means market is bullish, very strong. So to be looking for buy. That is what it's telling you. So, and based on your bias is buy, and you got a lower time frame, you mark your structure like this. So your work is what? To see market come down again, and maybe yes, tap here, then you look for buy. But sometimes market might not tap into this place. That is where your your advanced market structure comes in. You have your POI here, but it doesn't mean that market must come here. Market only need liquidity. Maybe they took enough and they change character here. So your job is what? Is to buy from here and go. So if you understand what I did there, you have your POI here, you're waiting for market to come here. But when you market open your new session and you see the market doesn't get to here, we have another change of character here after liquidity has been taken, just like same liquidity aggregating, but you only have a place to buy from. You have POI to buy from. That is the difference between this one and this liquidity aggregating. Liquidity aggregating doesn't care about any high or low. Liquidity aggregating doesn't care about high or low. You just do what? They just mark any low, any high, and allow market to take them. So it doesn't care about any low or any high. But this market structure should be SMC. We care about some low because there's a liquidity that was taken here. That is why we care about this low. If market got there, I just wait for confirmation. I will look for buy. But if market doesn't get there and this happen, I can look for buy too. So I remember one of wise men quotes, like things get better, in a long run, things get better. You mean if you're practicing this thing always, all the time, in the long run, it will always get better. It will be getting better. So that means someone that's practicing one thing 1,000 times, that person is going to become a dangerous person in that aspect, in that field. You are practicing one thing 1,000 times. You are better than person that is trying 1,000 things 1,000 times. So how do I put that? But what I mean is, if you keep repeating the same thing, you're becoming expert day by day, day by day. The only thing you can do is just make sure that you are risking little, as in according to your account size, little, so that it will not burn you out of market. The only way you can win is you have to be showing up. When market open, you have to be in there. But if market sweep you out, you blow your account, there's nothing for you to do. All you have to do is watching behind from watching from behind. So we all have the principle. Now you pick a session which is good, fine. You have a New Year session. You want to trade only New Year session. Remember, these are the rules. Gold alone, for me now, let's say we put good, trading New Year session. I'm taking 1% to the market. I'm risking 0.5% per trade. My target is, that is where I forget, minimum was 1:3. And if I see 1:5 also, I'll gladly take it. Or if I have chance to hold it, why not? So that is the plan. Now let us now get to the chart. First of all, we have to know our bias, right? So you want to market just close that week, right? Market close that week. All you have to do is what? Come to this weekly stuff and see what is going on weekly. So between you and I, there's no doubt we are all in this business. You can't tell me that this market is bearish. Market is what? Is bullish. Yes, market is bullish. So if you mark the structure that happened is, the reason why I said you cannot use weekly market structure, or you can say you are not a swing trader, see that you see a breakdown there, you want to see market to reverse. You are talking about weekly. So if you're a swing trader that used to wait for like 1 month for setup to wait, or 2 weeks or something, yes, fine, that is yours. But as a day trader, you cannot use weekly market structure or weekly support, all this kind of stuff to trade. It will just be a very nice worst nightmare for you. Yes, it's a very strong one for you if you have one, but you're not swing trader, we are dedicated. So right here, we see market is bullish. So if I say you want to use market structure, yeah, this was the last eye we see here, right? So what market do? Like I always said, if market want to break structure, market need to come back and claim liquidity. So as inducement or whatever you want to call it. So market came back here. So first of all, when market was coming down all this one, it failed to take this low and it failed to break the high. Simple as that. Market was coming down, it doesn't take any liquidity, and it also failed to take the high. So it had to come back, take this liquidity. So if you can see, if you want to mark, like I said, as SMC, as a market structure state or something, you need to find a place where market already takes some liquidity. You can see this low took all this before they could go up. So you have your breaker block here, right here. So that's SMC for you, market structure. So you have your POI, means you have a place you are waiting for. But liquidity algorithm doesn't care. Liquidity algorithm doesn't care about this high. You just mark this low, mark this low, mark anyone you see. As long as you see the market take this and there's a change of character here above, equal lows there, right here. So you have chance to be looking for what? Looking for buy. But so now we cannot use that because it's a weekly stuff. Market take inducement, you have a POI, maybe you get into trade or you wait for market to change character again, then be in this buy. Finally, market have chance to what? To break the high. Why? Because they already take the fall. They already had the fall, they were waiting. The fall they need to do that before was this low, this inducement, and they failed to take it before. That's why you see all these parabolating movements, and they came back claim it. So this weekly market structure. Yeah, we have break of structure. So will you wait now for market to do what? Will you wait for market to take another inducement, which is, where is it? Which is right here. So will you wait now for market to take here before you be looking for another buy as a day trader, or you want to mark liquidity algorithm now? So which is here, here. So if market just came back and take any of them, and we have market structure shift again like this, for you to be looking for buy again. You cannot do that. You don't want to, you cannot wait for that. So what we have here is what? What we have here is, we know the market is bullish. That is pretty fast. Nobody can deny that. So market is bullish. So let us see the last week candle. We want to trade this week. We can see there's kind of rejection before, but this kind of candle shows that market is very aggressive. Buyer are very, very, very aggressive. No doubt about that. So they are very, very aggressive. So means we are looking for buy for this new week. So let us drop that to 1 day and see more confluences. So if you see the 1 day also, it's also bullish. And sometimes you can use daily market structure or directional bias, but to me, it's still also very, very hard. If market is very strong, if market is not that strong, you can see all these movements, you can see But if market is strong, you barely see that kind of movement. So and you cannot say, you cannot know what market will give. All we have to see is watch and see. So for me, if you see this kind of movement, this is the last week, which is thought market close on Thursday, very strong candle. So this is a low or that day. So to me, if I want to trade now, I'm looking for buy based on the weekly, and I see the way the candle close also, it break the old high. So if market could come back, fine. But what I'm looking for is buy. So that is the bias now. The bias is I'm looking for buy. We're already through with that. No question asked again. So we now jump to what? You can go to 4 hour or 1 hour. See, I used to use 1 hour. Let me off this so that I'm not confused with first. This is session indicator, nothing more. I'm very happy, very clean screen. I only have a day separation. I like that day separation because, so this is the high and the low order. The last week Thursday market closed. So this scenario, you have your plan, which is New York session alone, gold, New York session alone, you are risking 1% per day, 0.5 per trade, 1:3 minimum, 1:5 if market give you, or hold if it's possible. Fine. So now, between this high and this low, it is where you want to find your buy, not the one that is happening today, that is happening right now. The one that's happening right now, you can only use that one to get maybe revenge trading. Like now, market is above the previous day. So you don't expect, because there's no previous data around here that you can use to see maybe market go to the another POI to sell market down. This is the highest high we have then. So you can't say you want to buy market here. Fine. You cannot say that. So, and besides, if you see very well, the moment that gold is up, market did not have any fair value gap that you can say, okay, if market come back to this fair value gap, I'll consider they have this one. But the point is this, as you can see, when market got there, they actually kind of react little, like they want to go up. But to me, is that you don't want to buy from outside of that previous day. If your buyer says buy, my suggestion is wait for market to drive down into the previous day. But your job now is like this 1 hour or 4 hour. I like 1 hour though. All I want to see is I want to find some fair value gap on 1 hour, because I already made a video too. What market do is what market take liquidity, market seek liquidity, and market feel fair value gap. So if I want to buy here, I could say, oh, market can, if market come back to feed this fair value gap, I'll look for buy, or I find any area that already sweep liquidity. You can see this movement. There's a taking this low here before market ride up. So if I want to, I could say I consider here as liquidity though. Consider here as liquidity and marking this area too as a buy place, but it's very far. So to me, if market got here that day, and remember, I only have here. Oh my God. Good. So I only have here. Now let us go to 5 minutes. This is 1 hour, 5 minutes is good. If it's 4 hour, 15 minutes is good. So if when market got here, all I need to know if it's New York session, because remember, I only trade New York session. I have that place as a confluence where market can react. That is why I mark it. But remember, we have strategy. Strategy means now, if I mark this, the first strategy is what? Is mark market structure. Market go up here, claim this low. This is the way I see last breakout structure right here. So this is the airstream, the break structure above. So this is the market structure. This is the last break of structure. Since then, there's no break of structure again. Market just pull back, go up. Market just pull back, go up, pull back, go up. So there's no break of structure since then. This is where we have break of structure last, and this is the extreme. So if I want to use market structure in this scenario, market need to come here, or it doesn't need to come here. Remember, we have this strategy also. Market doesn't have to come to your POI that you marked. We only mark here because of the fair value gap on our time frame, that 1 hour. So as you can see, this is New Year session right here. So you can see a sell happen, but I'm not looking for sell that day. So I'm looking for buy. So let us now get to the point here. What do I want to see that day? So if I want to use market structure, this is where I'm expecting market, but it doesn't market need to get here, right? The way we explained. Or I want to use liquidity algorithm. So I have some lows. I have a pretty lows that was swimming, and I have this low too. So you remember, liquidity algorithm doesn't care about PO high or point of interest. The only thing that's every high or every low, because I want to buy. So every low that was created when market was riding up must be in trouble to me. So if you see this right here, when market claim all this liquidity, New York open also, blah, 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 we have market structure shift here. So if you're using the liquidity algorithm or even market structure, something, market did not get your POI before you see. In this scenario, we have this fair value gap, we have this breaker block for entry. So some people are aggressive, some people use fair value gap, breaker block. To me, the only reason why I will not enter by here, but normal, based on our strategy, this is where so you want to put your stop loss above the, not weight the body of the candle like this. So target 1:2 or 1:3. So that means you are targeting the OI right here. So the OI was around 1:3, which is quite good enough for you. What market do? Market take you out. That means what? So when market take you out, you're still looking for buy. Boom. What again? You see another change of character here. And again. So, and remember, you have this place marked. So the reason why you will not buy here, I have another reason. It's not because I have fair value gap here that I'm waiting for. All I'm waiting for is New Year session, and I want to see market structure shift towards the buy after some liquidity has been taken. That's the pure fact. So let us say you use your 0.5 here, you follow that step, use your 0.5, market take you out, you have another market structure shift here, then you be this fair value gap also, you be in another trade here. Right here, your stop loss body. So you have what you are risking, maybe 1:3, but this scenario, you have this high because you have the whole high. So which is what? Almost 1:7, but if you keep it simple, 1:3 or 1:5, you already have a target. If you can see now, in this scenario, you use 0.5 here, you lost the trade. You use the remaining one here, you get the trade. The only real reason why I will not buy here is because I have time that I used to enter market when market near open up. I will not tell you that. You should be the one to do the job. I have time frame. I have sometimes hour where I used to enter during New Year session. So that's another secret. I have time that I used to be in the market. And it's a good thing we have some fair value gap here that market need to. So if you remember, you don't want to buy from outside the previous day. That is the reason why you will not buy here. But I'm telling you that this is the dynamic of your strategy when you see market structure shift. But you remember that you don't want to buy from outside the previous day, but from inside the previous day, which is this fair value gap. That is the only way you escape this. But the strategy tells you that there's a market structure shift. The only principle is that market was outside the previous day and market was not in any conference area. This is that fair value gap that I saw we mentioned on that. Oh my gosh. Hello, hello, ma. Mo busy báyìí ẹ pé àbúrò mi, mo ń ṣiṣẹ́ lọ́wọ́ mà. Mo ń ṣiṣẹ́ lọ́wọ́ sẹ́ẹ̀, mo ń ṣiṣẹ́ lọ́wọ́. All right, ma. So that is really why you will not buy here. But I'm just telling you that based on the strategy, it feels like it work, like you can buy here, but many things back it up why you shouldn't buy here. Markets did not get back into the previous day, which is right here. And I'm talking about the time also, which I will not talk about that one. So this is where it happens. So there's no trade there, 100%. We already talk it. I just showed you because something like this will still come up, which you're going to take. So this is the strategy. Market got into that fair value gap. You see market structure shift to the buy. Why not? You be in this buy. That is how you have your trader day. So you have 0.5, right? You have a 0.5, you raise 0.5 here, market ride up. See, market need to pull back also. So if you have good king, you can still be another entry here, like second entry, nearly 0.5, put it on. Blah blah blah. You have two entry that day, risking 1%. So you gain more than what you're supposed to have. It's a good day for you. Why that happen? It happen because you have your bias and you have your strategy. So if you now say, if you use market uh directional buyer liquidity algorithm, we have this low, or this low, or this low, this low. But because you want to trade from previous day, so this is the last low before that previous day. And when market claim it, what do you see here? You see change of character towards the area you want to go to, and you be in the market, which is very pretty fine. So let us clear that and go to the second day. So good, but it doesn't stop there. Let's go to second day. How will you be in the market second day? Your weekly says buy, right? So this is the trade that you took on Monday, a buy, which is very quite good. And what do you see? You see market break above also, which is nice. The weekly says buy. Yes, market can start reversing, but you don't want to predict a reversing for market right now because you are not market. Before you say a very good reverse, yes, market can take you out and start reversing. It's part of trading, but your concept is looking for buy. And you have your thing to look before you look for buy. So let us go to 1 hour. If you can find a good area, so this is the high of Monday and the low. So our point is what is find any place you want to expect market can react. Like what? A place that already sweep liquidity or fair value gap. Now market need to fill. So if you can see it, market makes some pullback here. Market was coming down pretty well here, down. I don't know how to explain it, but it's a pullback here, market up, down. Then this one take it, break above. So if you understand what happens here, so market already took some liquidity here and break above like a change of character towards buy on 1 hour. So this is the last single candle order block. So this is the order block right here. So I would like to see markets in this I consider everything that happens here as a liquidity. So I would like to see market here. If market go down here, fine, I could just look for buy. Unless I have another not. So just a pullback, pull up. Oh, there's a kind of sweep here. This candle, you sweep above, you sweep this low. The market will break it above too. Oh, which is nice. This candle is quite good. Yes, the reason is this is the last candle above. It break the low, it sweep below, sweep above, but later market close above it with candle, not sweep. Let's say market sweep it, then it cannot be considered it. So I have this low, I have this place too. That is the reason, nothing more. So it doesn't that I'm going to buy straight blindly. We have thing we used. So let us go to 5 minutes. This is 1 hour or so. So it's not that I'm going to buy straight. So what we are going to do now is what? We're going to mark our structure again. So let us mark structure as usual. So this is the low I'm talking about. So let us mark structure. Market change character here, market came back, take liquidity here, market break structure here. This is where I'm going to start the market structure because this is where the movement starts bullish again. So break of structure here. Market come down again, claim this liquidity. There's another break of structure here. So what I'm saying now is this is the last break of structure that we see until, let me clear this place. Okay, good. So we have break of structure here also. So where is the last low that breaks structure there? We have this low. Is the extreme that breaks structure right there. So let us now get it into the job. I have this low means if market come to this place, this is the extreme. You understand me? This is the extreme, but it doesn't mean market need to get there. Yes, we understand that. Let us now mark liquidity algorithm. Liquidity algorithm means any low that was created even the low, even this low, we are not concerned because liquidity doesn't care about any area or any low, just as the market is coming down seeking liquidity. Oh, fine. So when market open, right here, we have some pullback here. We have another, one right here. Your New York session open, you see market coming down, you're expecting market here, then you buy for your conference to buy. And market coming down here, claim all this liquidity, you see market structure shift here. Remember what happened here? Why you bought here that time, you didn't buy here because of market was not in the previous day. So let us see if market was in previous day. So market was in the previous day here? Yes, market was not, hasn't break the high. Even market hasn't break the high of the previous, that was on Monday, the high that created on Monday. It hasn't break it yet. So we are still inside the day, which is not bad. Market just claim liquidity, we have market structure shift. This trade, you have this fair value gap, use it, being in buy. So what do you use here? You use market structure shift and you use liquidity algorithm. So we target this what? Target this all high. And you have your what? You have what you're targeting, 1:3, 1:4, 1 around this is around 1:4, 1:5, which is quite good for you. So Again, let us see now what happens. The market was coming down. This is a quiet break of structure right here. When market break this all high, then we have a valid break of structure, a complete, not all this minor, not all this minor, minor. So we have complete break of structure there. Market was riding down, claim this low, another liquidity here. My point is, you can look for buy here. The remaining 0.5, maybe you want to jangle it. Then you can bring the market there. But what happened? Market take you out. So when market take you out, it doesn't even get to this POI again, this extreme POI, before market rally up. But this kind of trade, we call it liquidity hunt. Let me show you why. It doesn't get to that POI, and there's no change of character. There is no change of character. Let us say, before you even buy here, you need to do something. You need to, if market got here, you want to see some market structure shift to the up again, so you can add another buy. It's a jackpot, but there's none. If you see this market that was coming down here, it was coming down in a straight line. There's no pullback. So some people will say, market, there was a pullback here. You see this candle, market pullback. No, there's no pullback there. That is the reason why this movement was just a liquidity hunt. So let me show you. This is the high of this candle, and this is the low. So you can see that this 1, 2, 3, 4 happening between these candles. So there's no pullback. So it's just what? It's just a single leg. A single leg down here. It doesn't get to here. Let us say there was a pullback and we see a market structure shift again. Of course, why not? It can be another buy, which is good. But now, market just came down straight and starts going up. So this, in this scenario, was just a liquidity hunt to me. So market came back, hunt liquidity. It doesn't get to that POI. There's no change of character for conference to buy. It's just an easy ride. You have your easy trade here already, which is quite good. This one, you shouldn't be there unless you have another trading strategy, which is support and resistance, which is very quite good. But your setup, your algorithm, your liquidity algorithm, your market structure doesn't support this movement at all. It doesn't get to POI. There's no change of character here. So which is very, very not quite good. But markets laugh up. It's not a bad thing. You have a good day, you have your day trading secured. So let us now go to another day. Let us see how this today close one day. So remember everything we are doing. We are trading one pair, one session. We have what we are risking per trade, the maximum risking per day, minimum risk reward, and anything we get out of that. This is how Tuesday closed. You can say very good, very even good more than this. Very strong, like market is supporting your weekly buyers. You should be looking for buy. So, which means what? Which means you are still looking for buy on Wednesday. All you have to do is what? Mark any area like you used to do on 1 hour. So this is the high of Tuesday and the low. Yes. So what do you want to do here? The same thing. You want to find a place that already sweep liquidity that you want to use or any fair value gap. So in this scenario, we have a lot of fair value gap. We have one here, market already use it for consolidation. So we have 1, 2, then let me be using, we have 1, we have 2, we have 3. So in my experience, if I want to use fair value gap for entry, not for conferences, if I want to use fair value gap for entry, this is for conferences, not for entry. If you want to use fair value gap for entry, if I have three fair value gap, I will use the middle. That is my, if I want to use fair value gap for entry, not confluences. So if I want it for entry, if I have three fair value gap weighted like this for my entry, I will use the middle for entry. So, but in this scenario, this is confluences and market is bullish on the long run. Market will find enough reason for them to drive down little because they know they still have more to go up. So if they have chance to drive down in the long run, they will take it. So that means market, I'm expecting market to fill all these fair value gap and use this because there's a sweep here. Market broke it above. You can see sweep broken above. So this, the way I was waited for this one also that time. So I waited for this market to tap in here, but we all know the principle. Doesn't mean market has to get there. So I want market to fill all these fair value gap before I have that. So let us go to, let's see how market react. The other thing is I don't want to buy market above the previous day inside, like I did all this one inside. So now what we do, let us mark our structure. That's how we do. Structure means the last break of structure. Yes, liquidity taken. This liquidity that hunt yesterday, we talked about, we break above the O high. So break of structure means this is a quiet place to be looking for buy also. Is the extreme. So a certain market to come there and you buy. Remember your market structure, it doesn't mean market must get there. So we have this our extreme as a market structure trader. This is SMC. Now we want to use liquidity aggregating. Liquidity aggregating doesn't care about any low or any high. Liquidity aggregating does what? Just seek liquidity. I don't care if I can mark this low, it's valid liquidity aggregating. And you have your liquidity that was rested, market to claim. You have your POI as an SMC trader. You have your liquidity rested as a liquidity aggregating trader. What are you waiting for? It's New Year session to open. When you open like this, boom, liquidity has been taken before then market claim this last low here. As a SMC or market structure trader, market did not get to your POI, which is very, very quite possible. We talked about it. So what do we see here? We see market structure shift. Then this value gap for entry, boom. Your stop loss below the body. If market want to work, there's no reason for them to violate the body of that candle below. So we have the O high, which is resting here. And you have what you're targeting, minimum 1:3. These are 1:3 plus. So you can just expand it. Market need to break above 1:5 or just keep things simple. Also, you still have chance to be in a market. No market was laughing, market is creating some liquidity to use. We have liquid, we have 1, 2 here. So if I want to use, we have this high and this low, we have 1 here. This high and this low, we have 2 here. If I want to use this fair value gap, I will use this last one. Market did not get there. Market just sweep this area, break it above. Of course, I have another what? Another one. I only have 1 here. So I only have 1 fair value gap here, which I'm going to use to be another in trade. If I want to join trade, the remaining 0.5, that's why you can just be in the market there also. And you keep this one minimal, very small. Can be 1:2 or 1:3 also, which is also acquired. So that is how this one went. Use your liquid aggregating, which is fine. Market structure, which is not bad. Market didn't get to POI, you have a market structure shift. Easy trading. Why all this happen? Because you have the setup, you have a plan, you have strategy. So let us go to the next day and see what we can do one day. As a day trader, you need to understand how your daily time frame candle is closing. It's very, very important. That's why you have your weekly. Your weekly is just a single candle. You already know what you're looking for that week. You want to see that candle to keep booming for that week. So this is how this candle closes. You see, market pullback, close above with a good candle, which is telling you also that we are ready for buy. So let us go to 1 hour or so. So all we have to do is what? The high and the low of that Wednesday. We want to consider a place. So this is the high and this is the low. What do we have here? We have market take some low, market break above, which is good. We have this other block again. If market come to this other block today, we trade. Or do we have any fair value gap? No, we do not, but we have something else, a breaker block. Do you know some? Before market could break this high, before they could break this high, we have some rejection. So this is what people call support and resistance trading. Just call it breaker block in SMC way. So it's a breaker block on 1 hour. It's going to be strong. So I have this breaker block. I have this other block, a single candle. We call this one BB, breaker block. We call this one score, single candle other block. There is no fair value gap, only the one before this single candle gap. So if market to feed this fair value gap, it should supposed touch into this other block, which is single candle other block. So we have these two scenario places we want to buy from. We like to see market there if market come there. So again, what we do, mark our structure, right? So we can see this is the last break of structure that we see. Good, break of structure above. This is a low that broke it, which is quite good. So this is the extreme. As a market structure trader, this is the extreme. This is the extreme POY. This is decisional POY. This is decisional POY because it took some what? It also took some liquidity. Remember this entry yesterday? So you also took some liquidity before spiking up. We call this one decisional POY. So decisional POY and extreme POY. All this liquidity that we're talking about, we call them engineered liquidity. After the first one is taken, which is inducement, the remaining one we call them engineered liquidity. So that is SMC, which is market structure. Now liquidity algorithm. Liquidity algorithm doesn't care about low or high. As long as just mark any liquidity area we see, which is pullback. Any pullback is a liquidity. So it doesn't care. Only your market structure care about a place that's already sweep liquidity, like here or the extreme. So now it's for you to wait for New Year session. Boom. So when New Year session open, you see market into this breaker block on 1 hour, and it's already claimed all this liquidity as a liquidity algorithm trader. And we see a market structure shift, go back down again, a market structure shift here. Boom. You can be in the market in this. I actually use this. I use this flip. So put my stop loss. Put stop loss below this candle, not the body. So targeting the O high, that is the plan now. You know, market need to break the high if you have a good thing. So this is around 1:3, also almost 1:4, which is quite good for you as your strategy. And Market go up little, it doesn't take that. You have a pullback. This is chance for you to be in another trade. You have 0.5. In this scenario, maybe you already secure some trade. If you reduce your stop losses, take 1% or 2% out. Happens. If you know how to do that, I'm not the one to, we have a flip entry here also. This is where the 0.5 money will work again because you believe your strategy and you believe in the bias. So there's nothing for you to panic. Now target the whole thing high again. So you have more profits. This around almost 1:4, 1:5. You have these two trades. But what happens here, if you watch very well, market did not break above, market just sweep. So if you have this kind of liquidity sweep on the high, and you have change of character here, downward, it's another trade, but I'm not doing that because you are looking for buy, you already have a trade. So this kind of trade is another thing. If I can teach you that one, maybe another video, how to trade liquidity sweep. So when market do this, you should know that market does not break structure. Yes, you have your own trade. You have your own trade to win, but market does not break structure. If market sweep something above like this, maybe market need more liquidity below. So when market that come, you see, claim all this one. I'm not sure it's a trade anymore that day. Should just go off. Boom. So that is how the day went. It's a good day. As you can see, you have a safe trade almost 4 times. Very difficult, but went through. As your strategy says, as your plan says, everything been good. Oh, now see the way this candle close. Yes, your weekly say buys. So can you consider that is the reason why you need to come back to your daily time frame and see how the candle closed. You can see all this one keep breaking above, breaking above, breaking above, telling you that your weekly bias is telling you good thing, and your daily is confirming it. But see this candle, you cannot use this kind of candle. You're looking for buy, can you? So in this scenario, if you want to follow the bias that market is still going up, what will you do is what? It's just allow market to seek liquidity. Take this low. You're not looking for selling, you're looking for buy. So that means this low need to be taken. That's the preferred because this candle seems like indicator candle, body in between, week above, equal week below equal. So they're both buyers and seller in this market right here. So you don't know which one is going to win. All you have to see is just market claim it because you're looking for buy, market take all the liquidity here and you see a market structure shift. So if you go to 1 hour, what 1 hour want to do for you? 1 hour will do for you that if market will take this low, if market seek this low, where can you use as a confluence here? Oh, remember we have single candle order block that we are waiting for here yesterday. When we have this breaker block, we use the breaker block to buy. And we have this single candle order block waiting. So it's a projection like, okay, if market got here, if market take this low here, and I see confluences, I buy. That's that. Now, it is now up to you. Well, market comes here, blah, blah, blah. I don't know. But you can't trade. Why? Because you are still sleeping. In this moment, if you are still sleeping or you are doing something else in your life, because you only trade what? You only trade New York. You have the plan. New York has been the one that is helping you so far. So it doesn't matter come here now, you want to be looking for buy. I don't know. But I'm talking about the plan, original plan we have. All we have to do is what? When market got here and we see market, then we should be marking the structure that is happening from here. So we can see market came back, claimed this low, means there's a break of structure here. That is job we want to do. Is there any break of structure yet again? Market came down here. It did not claim any liquidity. None. So this is the last break of structure we have. So this is what? So if you want to use any area, one market break structure, either use single candle order block or use the fair value gap. I can see this single candle order block, everything has mitigated each other. Mitigated here. You only have this fair value gap fresh, where you have to keep everything below here. So this is your what? Your extreme POY. But it doesn't mean that market can get there. Remember, it doesn't mean. So now it is now up to your what? Liquidity algorithm. Your liquidity algorithm doesn't care about any high or any low. As long as your market structure care, your SMC care about this low because it's the last play that break structure last. Liquidity was claimed, market broke above. From this point, because we have conflict in the market, and we can see the market been having up, liquidity taking break above. That is why we are marking our structure from there. So this is the last break of structure, extreme POY, and this is your liquidity algorithm. So when New York open, you need market to come down, right? So market come, claim this low, claim this low, claim this low, and you see market in your area. To me, despite market go to my area, doesn't mean I'm buying straight. That is the one thing I have for you. I don't buy straight. If at all I have a POI, I still need to see what? I still need to see market structure shift above. So where is your place to buy from now? As you can see, this is the single candle order block. So it has to be this candle, or you have find another flip entry or whatever, because this candle is from this up to this down. If you mark it, yes, you've been in market. You can just allow market to make some flip entry or fair value gap, like this kind of one, then find yourself in market. I can just use this kind of flip. It took the last candle below before the back up. So being in market there won't be a bad thing for you. Remember what you're risking. So you know that because of this flip, that is why you enter this market. So if market could take you out here because of using flip, because you use this flip, if market take you out, definitely you can see enter market again here. That is why you're using 0.5 for trade. You cannot keep your stop loss below here, it's too large. So but you want to respect this flip, market laugh up. Can you enter another market? I don't see any chance for you to be in the market because we have this 1, 2 fair value gap. So I rather see market come back, use this last fair value gap. Market just keep laughing up. So you have your trader there, almost 1:5. It is not you that make this work. It is not you at all. It is the strategy. It is the bias, and it's the strategy and the plan. You have go to trade, you have New York session, and you have strategy of market structure or liquidity algorithm. Simple as that. So if you keep doing this every day, you become so powerful in it that if market even take you out, it will just be like a joke to you. Yes. And market do manipulate. This kind of movement is a manipulating movement. So market need to seek the sweep here, take all the low. It happens here on Thursday. Also happens here if you remember, when did it happen last? Also happened on yes, happen on Tuesday. Also take here above. No confidence to buy, no conferences to be in the market, to be in the sell, to be in the buy. This one even good. You still have confidence to be in market here. There's a chalk, there's a entry. but still you are not looking for soil. So that is why you are not going for any of that. So thank you guys for watching, and I hope this helped you a little. This is what I do for you. This video I just put up for you guys is a combination of everything I've been putting up, from pullback, liquidity, algorithm, directional bias, market structure, advanced market structure, everything. I just put it together for you now. So it's just for you to back test and put it into work. Remember, you cannot be perfect in a day. I'm doing for you. I'm not perfect yet, but all I know is that I have a principle that I follow. So be safe, guys, and don't forget to click the like button, subscribe, click your notification bell. Anytime I drop anything like this, you'll be the first person to know. And share, share for love of God. And if you couldn't want to know how to use Amanai the New Year session, which is I'm talking about the time of New Year session, when time to enter market at New Year session, when time if you see your conferences, that will be the